and this is episode 20 of the Red Pilled Orange Pill Investor. And I like to do an update for week and just update my up down. It's actually not for this account; it's a different account, but I think isn't bad considering Tesla's down. Point of this strategy. So for me, it's preferable to buy and hold because if you bought Tesla a week ago at 224, now you're down 12. You're down 1,000. So 10% improvement. Um, Ever talk about price targets, fair valuation? I don't really do price targets. You're not going to hear me talking about all that shit. Just say it might be worth looking at all is just because other people are. So you could be somewhat informed about why other people are behaving the way they are and reacting to whatever they see in the chart. And I operate on a couple of assumptions. The first assumption is that the stock market's going to go up more than it goes down. If you don't believe that, why would you ever own stock or anything long in the first place? So that's my basic assumption, and that assumption could be wrong. It could go down and stay down forever. It's never done it, but it doesn't mean it can never do it. This and doing, I would say, too much research in a company is just not, as far as in my opinion. And I want to learn just enough, and then I stick to that decision. To But I'm not gonna overspend my time, which is a more precious resource than money. And the reason it's somewhat similar to this book that I read. It's called The Myth of the Rational Voter: Why Democracies Choose Bad Policies. And it's why I stopped voting. You can do a whole bunch of research on a candidate, their stance on this, that, and the other thing, but you don't even know if they're lying. So you have to be willing to someone is telling the truth when they're incentivized to lie. So they have to be going against their own incentives. Are driven by irrational trivial things. So the politician's incentive is to just to get you emotional and vote a certain way, and that's why we end up with bad policies. And so it doesn't even make mathematical sense. Like, if 100 million people vote, you're in the millions. You're not going to cast the deciding vote. So if you want to vote, and it's worth your time to register to vote, that's great. Don't give a shit. But you spend researching a candidate that may or may not be telling the truth, and even if they are telling the truth, may or may not be able to get enough people to agree to get whatever they want passed. The fact that there's a snowball's chance in hell of you actually casting the deciding vote. So all of your effort is basically only that. All of the people who, even the people that say, oh, you're going to vote for the lesser of two evils, but everybody else is going to do that. And so their bad decision is being shared by you who may have made the right decision. And there's nothing you can do to stop it. So I see that as kind of a waste of my time, and I don't like to do things that waste my time. Analysis and trying to predict what the price will be from week to week that I'm going to do. This week, and I pick something, I try to get at least 1% premium, and I try to get a good amount of call away value. Sometimes I'll try to even them out. Like if I can get 2% premium and 2% call away value, that's cool. 1% premium and 3% to whatever. Some of these mining stocks. I should have done Riot because it's $10 a share. The math would be easier. Up to, let's see, $2. Well, let's do $1.50 because that's about 10%. So you could go up to 17, 18 away, a little over 3% premium. Record, but the settlement cover calls is not necessarily meant to be the automatic as far as the and it can be even better than buy and hold or dollar cost average and all that. Because if you do pick the 18 strike and the price goes to 18, it's buy or worthless, which means you get to keep bucks as the price changing while we're talking, even though it's after hours. And here, and the price goes to 18 and you get 10%, now you've gotten 13%. Whereas whoever was just buy and hold is getting the 10%. The stars align and you've magically somehow chosen the exact strike, then you can collect the percent premium and the call away value and keep your shares. So necessarily happen often at all. The point is to give yourself a higher chance of success trading upside to do it. Tomorrow. And I think I had rolled these last week, so that's why the strike is like way higher than what I would normally pick. And then I just decided I was like, okay, well, I got these two that are crazy high. I'll just split the difference and, make one very close to at the money. And the premium from the two add up to somewhere in here. Like if I had picked 17 and a half and 18. It's not rocket science. It's funny when I sometimes they're like, oh, I'm scared of options. It's leverage. It's complicated. But it's so long that it just seems simple. But it's strategies, and this is the one that I gravitated to because it just seems like it's simple. 75, 80, 85% chance of profit, anywhere close to, you know, zero point 0.3 delta. If you're a Bitcoin maximalist, if you're a Bitcoiner, take the $50 and go buy $50 of Bitcoin with it. Just generally do. Take that $50 and buy 3 more shares tomorrow. Side for 100 shares, but you have infinite upside on the 3 shares. Anything without doing any analysis whatsoever. I would basically check the news on a stock, and as long as they didn't have, like, as long as there were no news headlines that said this company was potentially going bankrupt, I would trade it. If the premium was high, I remember back in the day, COVID stocks were pumping, and you know, you could get 10% both. Ridiculous if you can get 10% return every week. Really look for those anymore. My stance has changed on that. I've listened to so many people talk about Tesla and where they're headed, and I have a personal friend who Tesla as well, that hyped me up on Bitcoin to begin with, and super smart guy, so I trust his opinion. Do subscribe to Stephen Mark Ryan's channel, Solving the Money Problem, and he's got his own fair evaluation, and it looks reasonable to me. I don't really see the point of trying to learn how to do a fair valuation and then just kind of reinventing the wheel. I'm about spending as little time actually doing the trading as possible. So to make any trades outside of Fridays, expiration Fridays, just roll them. From last week, generally for a penny or so, or more if you get lucky and the price has actually gone up. Calls at new strikes doesn't take long. Minimum efficiency at this point. I don't want to do a shitload of research in a bunch of different companies. Be on market chameleon, trying to sort for high implied volatility, which is generally can mean higher premiums. A lot of this stuff has high implied volatility because it you know, there might be pharmaceutical stocks that may or may not get trials passed, or could be, what was it, some of the car rental companies were here for quite a while because we weren't sure if they were going to go bankrupt, and I'd trade them if the premium was good enough, but never falling in love with any stock. So, and that was profitable, but it was just a pain in the ass. It was a lot of work. I'm in Tesla being the winner, Bulls driving these humanoid robots. Bitcoin is the clear winner in the financial industry. It's going to take over. is going to be easier to do by just buying Bitcoin and rather than dealing with and maintain a house and renting a house or buying some $1 million painting and steals it, authenticating it. Hell, even buying gold, you can't go without melting the shit down, even pure. So gold, last 6,000 years, Bitcoin is the best money for the next 6,000. And why I won't be in here and uh, with Tasty, I do have like the simple moving averages, 50 and 200 days, I believe, um, just to track if we're in a bull market after whether we're in a bear market after a death cross. That's the extent of the technical analysis that I do. I think it's a good idea to know what kind of trading environment you're in. I don't name it great, but what to talk about today. Percent for the week could be much worse since Tesla is down big time. But selling the covered calls and collecting premium tends to offset some of those losses. So that always softens the blow a little bit. And with that, have a good one. Be good, y'all.